You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 9th day of May, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. Speaking of Thursday, tonight is our members-only workshop. If you have been on the trial for the past week, still got time to reply to that email you received or should have received yesterday. If you didn't get the email, call 949-42-EMINI or email support@cfrn.net, because you still have time to become a member today, which will gain you access to the members only workshop tonight. Check your inbox. It's probably there. Now, this is our second live broadcast of the day. We do 2 every trading day. The first live broadcast, that is reserved for members only and those who are taking our 1-week free trial. If you have not taken your 1-week free trial, go to mytradingiq.com, and at the very top of the page it says 5-day free trial. No credit card required. That part's important. Click the link, complete the registration form. Take a minute, make sure you fill everything out properly. It's an automated process. If you don't do it right, we don't get it, you don't get the trial, and nobody wins. But if you fill it out properly, everybody wins. Okay? All right. Now, when you take the free trial, doesn't matter what day of the week or weekend or hour of the day that you sign up for the trial, you will get 5 consecutive trading days. So today's Thursday. If you were to sign up today, what would happen is we'd get your desktop set up today, your indicators indicating today. Your trial would start tomorrow. Saturday and Sunday would not count against you. And then you would have Monday through Thursday of next week. So, 5-day trial just became a 7-day trial. Now, when the live training room ends each day, we take a 30-minute break and come back at 12 noon Eastern for this broadcast, the afternoon broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's a couple different ways to join this afternoon broadcast live. The best way, go to mytradingiq.com, scroll down the page to where it says afternoon broadcast. Click the link, complete the 30-second registration form, and you're done. You only have to do it once. Going forward, every trading day, you'll get an email about an hour before this broadcast starts. In that email, there is a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. Benefit there, you have access to the question box so that you can ask questions and participate in the discussion. Now, there will be days when you're out of the office, away from your desktop, but you still want to join live. And there'll be days when you're busy, can't join live, but want to catch up later. That's when you go to our YouTube channel, youtube.com/CFRN. It's easy to remember because you already know the YouTube part. So all you have to remember is CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, if you will, but we also archive each and every daily broadcast. Currently, there's over 2,500 daily episodes archived for your educational and viewing pleasure. youtube.com/CFRN. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but really, you can see how we've evolved over the years. Thanks to the power of YouTube, you can scroll back 6 weeks, 6 months, 6 years, even more. Just pick some days at random. Watch a little bit, fast forward a little bit. Grab another day, watch a little bit, fast forward a little bit. You'll discover the thread of connectivity, the thread of continuity that's woven through each and every daily broadcast and our very vibrant trading community. Again, youtube.com/CFRN. And while you're there, be sure to hit the subscribe button and the little bell. That way you'll be notified anytime we go live. All right, let's open with our daily devotional and a word of prayer, as we do every day. Then we'll get into the markets. Then about 12:45, 12:50, Michael will join us. He'll give us a recap of everything that happened this morning in the live training room. And then we'll go live on the TradingView platform for about 30 minutes. And then I'll wrap everything up with our good word for the day. Now, the topic of our devotional this week, what is God doing? We've all wondered that, given whatever set of circumstances we're facing at any given moment in time. Our scripture today is Hebrews 11, verses 5 and 6. I'm going to share it with you from the Message translation. By an act of faith, Enoch skipped death completely. They looked all over and couldn't find him because God had taken him. We know on the basis of reliable testimony that before he was taken, he pleased God. It's impossible to please God apart from faith. And why? Because anyone who wants to approach God must believe both that he exists and that he cares enough to respond to those who seek him. Again, Hebrews 11, verses 5 through 6. So today, let me ask you a question. What do you expect to happen when you pray? Do you expect God to answer? Do you expect to get exactly what you ask for? Or if you're brutally honest, do you expect nothing much to happen? Do you approach prayer more like a wishing well? It'd be cool if you got your wish, but, you probably just wasted a penny, right? I think this is an unfortunate trap we can fall into when it comes to prayer. If you go through a rough season, or prayer that didn't go your way, or maybe you've been trying to hear from God for a while and he just doesn't seem to be answering, it can sometimes shake our expectations of what God might do. But God is always working in our lives, always answering prayer, even if it's not in the way or the timing we would like. He is alive and active in our lives. We just need to reframe what we expect God to do. If I can be transparent with you, I fall into seasons where I stop seeing God at work in my life. Sometimes it feels like He's not hearing me. Seems like all my prayers come back with a big no, or at least a, not right now. It gets discouraging. But eventually, I snap out of it and start praying. God, show me what you're doing in my life right now. I'll then commit to writing down everything I see God doing. Every time I notice Him at work in my life. Instantly, these lists fill up. I find myself filling pages of a journal with lots of little things, and sometimes big things, that I see God doing in my life. Did God suddenly kick His activity into high gear because I prayed? No. He's been working like this the whole time. The problem was me and my expectations. I either expected Him to do exactly what I asked for in the exact timing I wanted it, or I let my faith get shaky. And I honestly didn't expect Him to do anything. Both responses are a mistake. If you expect God to work in your life, you will absolutely see Him working in your life. You just have to keep in mind that He's God and you're not. His actions may not be what you would have wished for, but they will always be with your best interest in mind. So I encourage you to start today. Write down everything you see God doing or hear Him speaking to you. Confident you'll have more written in just a few days than you ever thought possible. But this has to be a conscious decision, a conscious activity. It's kind of like trading. You got to do the work. So, with that, join me in a word of prayer. Heavenly Father, we thank you for the example of Enoch, who walked with you by faith and pleased you. Just as his faith pleased you, may our faith also bring you joy and honor. Help us to walk in close fellowship with you, trusting in your promises and seeking your will in everything we do. Lord, we confess that sometimes our faith wavers and we struggle to trust you fully. Forgive us, Lord, and strengthen our faith. Help us to fix our eyes on Jesus, the author and perfecter of our faith, and to rely on your Spirit to guide us in the paths of righteousness. As we seek to live by faith, may we also recognize the importance of seeking you diligently and believing that you are a rewarder of those who earnestly seek you. Help us to trust in your goodness and your faithfulness, knowing that you are always with us and that your plans for us are good. Thank you, Lord, for the gift of faith and for the assurance that as we walk by faith, we can experience the fullness of your blessings. May our lives be a testimony to your faithfulness and your grace, bringing glory and honor to your name. It's in Jesus' name we believe and pray. And everybody said, amen. Amen and happy Thursday. Let me give you the numbers from around the world. Start here in the U.S. cash markets, or the indices as they're called. The Dow is up 155 points. NASDAQ is up 28. S&P 500 is up 14. The Russell 2000 up 9. So, not a big day, but so far, a green day. Now, in the commodity basket, crude oil is up 20 cents, trading $79.19 the last. Gold is up $15.90, trading $23.38 last. Silver up 7 cents, trading $28.36 last. In the Asian markets at the close, the Nikkei dropped 128 points. The Shanghai gained 25. The Hang Seng gained 223. Now for the Shanghai, 25 points is almost 1%. And for the Hang Seng, those 223 points, that's about 1.25%. In the European markets at the close, FTSE up 27, the DAX up 188, which is just over 1%. The CAC up 56. So, we had a mixed day in Asia. It was a green day for the UK. And so far, it is a green Radio Thursday here in the US of A. Now, we had some economic news out this morning. The number of Americans applying for unemployment benefits jumped to its highest level in more than 8 months last week. Another indication that the red-hot U.S. labor market may be softening. So, remember, this isn't your father's market. In the old days, bad news sent the market lower, good news sent the market higher. But right now, what the market wants is bad news. And that's what we got. Unemployment claims for the week ending May 4th rose by 22,000 to 231,000, up from 209,000 the week before. Though last week's claims were the most since the final week of August 2023, it's still a relatively low number of layoffs and, not a cause for concern. Yeah, it is. Okay. I heartily disagree. It's, sinkholes don't all happen at once. First, there's some cracks that you can barely see, and then the cracks become more visible and more visible. And then you wake up and your car in the driveway has been swallowed up by a sinkhole. The reason these poor numbers have sent the market higher is because this gives the Fed one more reason to lower interest rates. It's kind of sick when you think about it. But That's how they think about it. Weekly unemployment claims are considered a proxy for the number of U.S. layoffs in a given week and a sign of where the job market is headed. They have remained at historically low levels since the pandemic purge of millions of jobs in the spring of 2020. Now, when you keep hearing the current admin talking about how they've added all these jobs, no. We're seeing people return to jobs they lost, if that company is even still around. Last month, U.S. employers added just 175,000 jobs, the fewest in 6 months, and another sign that the labor market is loosening. The unemployment rate inched back up to 3.9% from 3.8%, and has now remained below 4% for 27 straight months, the longest such streak since the 1960s. The government also reported 8.5 million job openings in March, the lowest number of vacancies in 3 years. But that's what the market wants. Negative economic news to justify the Fed lowering interest rates. Now, the hot topic everybody's talking about and can't quit talking about is artificial intelligence. The Biden administration is poised to open up a new front in its effort to safeguard the U.S. AI from China and Russia, with preliminary plans to place guardrails around the most advanced AI models. Good luck with that. Government and private sector researchers worry that U.S. adversaries could use the models, which mine vast amounts of text and images, to summarize information and generate content, to wage aggressive cyber attacks, or even create potent biological weapons. Here are some of the threats posed by AI. Now, AI is very fascinating, but there's issues. And some of the big tech guys have been, long before there was open AI and whatever, free. I think all browsers now come with some kind of free AI tool attached to it. But long before we really understood what AI was, Elon Musk, Bezos, and others, even Zuckerberg, they're visionaries. They saw this coming, and here it is. One of the most disturbing, I think, is deep fakes. Well, they're all disturbing. Deep fakes are realistic yet fabricated videos created by AI algorithms trained on copious online footage. And they are surfacing on social media, blurring fact and fiction in the polarized world of U.S. politics. They say if you have, I think it's just 20 minutes of video of anybody talking about any subject or topic, these AI models can take, and I don't even think it's 20 minutes, I think it's less than that. They can then create a video where that person appears to be saying whatever they want them to say. I think you see where, that could become a real issue. Especially when you're not able to tell. I mean, it's not like there's a watermark stamp that says, hey, by the way, this is a deep fake. Pretty soon, will journalists even be able to detect the difference? I guess even more important is, do they care? Now, This type of synthetic media has been around for several years, but it's been turbocharged over the past year by a slew of new generative AI tools, such as Midjourney, that make it cheap and easy to create convincing deepfakes. Image creation tools powered by artificial intelligence from companies including OpenAI and Microsoft can be used to produce photos that could promote election or voting related disinformation, despite each having policies against creating misleading content. So they both have policies against creating misleading content, but then they hand you the tools to do exactly what they say you shouldn't do. Some disinformation campaigns simply harness the ability of AI to mimic real news articles as a means of disseminating false information. While major social media platforms like Facebook, Twitter, and YouTube have made efforts to prohibit and remove deepfakes, their effectiveness at policing such content varies. For example, last year, a Chinese government-controlled news site using a generative AI platform pushed a previously circulated false claim that the United States was running a lab in Kazakhstan to create biological weapons for use against China. Now, that's from the Department of Homeland Security in its 2024 Homeland Threat Assessment. National Security Advisor Jake Sullivan, speaking at an AI event in Washington yesterday, said the problem has no easy solutions because it combines the capacity of AI with the intent of state and non-state actors to use disinformation at scale to disrupt democracies, to advance propaganda, and to shape our perception of the world. Other issues that are creating very big problems. AI makes it simple to create bioweapons, cyber weapons, the list goes on. Sure you're aware of it. Sure you've heard about it. Now you've heard about it again. So, let's go take a look at something we do have control over. Logic 247. It's our 24/7 around-the-clock E-mini alert service. We're in week 301. Over the last 301 weeks, we've issued over 16,600 individual handcrafted alerts. This week, so far, since the markets opened Sunday night, we've issued a total of 25 alerts. Still waiting on the outcome of 4, 21 actionable alerts, of which 1 or 5% would have been stopped out based on market structure in a very simple process we teach all of our passport holders. Over the last 301 weeks and over 16,600 individual alerts, we've averaged on a weekly basis 20% or less of the alerts being stopped out, again based on market structure and a simple process that we teach all of our passport holders in their one-on-one mentoring sessions. So while it's not been a big week for total alerts, because the market's been pretty flat and sideways, percentage-wise, it's been a very good week. Now, the logic alerts come with an entry price, an initial target, and then additional targets, and then a final trade to target. The initial entry price to the first target. That's to help you get your goal for the day. But purpose of the alerts is not just so you can trade the alerts and not worry about learning how to trade. They are part of the training process. Now, the multiple targets that you see in some of the logic alerts simply come from looking left. That's all you got to do. On a long trade or a long alert, all you got to do is look left at previous swing highs to see where you may have an obstacle to your trade. On a short, you look left for previous swing lows. So if what you'll do, if you really want to learn how to read a chart and understand what the chart is telling you, when a logic alert comes out, even if it's a market you don't trade, go to the 30-minute chart. That's where all alerts are created. Draw a horizontal line at the entry price, a horizontal line at the initial target, and then the second target, the third target, however many targets there are, draw horizontal lines. Or Michael built that into the TradingView software so you can just use those lines. But I'm looking at them from a 30-minute perspective. For me, anything less than 30 minutes becomes a bit noisy. So that's why I say all alerts that I create are done on the 30-minute chart. I consider those to be major swing highs and swing lows. And while the entry price to the initial target is your goal for the day, from target to the next target, that can be looked at as a trade all unto itself. And then the next target to the next target, a trade unto itself. If you'll draw these lines, it will become so obvious to you. Pretty soon, you won't need the logic alerts. You'll simply be able to look at a 30-minute chart and clearly see where the window of opportunity is. Remember, you only need 2 points a day in the S&P to get your goal for the day. Or 10 ticks in crude, or 10 ticks in gold, 2 points in the Russell. You don't have to keep trading all day long, because if you do, you're probably going to just end up handing back to the market whatever you earned in the early going. And that's difficult for a lot of new traders. And they want to be in the thick of things. They want to be in the action. And when you're brand new, it's not a bad idea to get some screen time beyond your goal for the day. But remember, when you start out, you're trading in your demo account, not your live account. You need to put together 10 consecutive days in a row where you reach your goal, 10 trades or less, before you even think about going live. Once you accomplish that, the 2420 blueprint will give you the green light to go live with one contract. Now, long before we had Logic 247, 301 weeks ago, we had the concierge trade alerts. They're a little bit different in a couple different ways. Number one, the logic alerts can come out around the clock at any time, 2 a.m., 2 p.m. Futures trade around the clock, and we have traders around the globe. Our day session is their night session, and vice versa. CTAs are published as a static report shortly after the beginning of each session. And each Globex session begins at 6 p.m. Eastern, Sunday night through Thursday night. Sunday night at 6 p.m. Eastern, that's the beginning of the Monday session. Thursday night at 6 p.m. Eastern, that's the beginning of the Friday session. Then the week closes out Friday afternoon at 5 p.m. Eastern. So when this report is published, what you should do is go to the 30-minute chart of the markets you actually trade and make note of where price is at the time the report came out. It will always be between these two numbers. Then draw a line in the sand at the long target, a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. If price gets above the 30-minute BVC, it's attempting to reach the long target. If price gets below the 30-minute BVC, it's attempting to reach the short target. BVC simply stands for bull-bear cross. The BVC is the green line you see on my charts, all of them. When price gets above the green line, we anticipate higher prices relative to whatever time frame we've applied the BVC. If price crosses below the green line, then we anticipate lower prices relative to whatever time frame we're observing. And again, for the alerts, it's always the 30-minute chart. But you can apply the BVC to any time frame. Tick chart, range chart, with the same expectation. Now, with the CTAs, you're stepping up your game. Okay, with the logic alerts, I'm giving you the entry, the initial target, additional targets, the final trade to target. With the CTAs, you start developing the ability to do that yourself. You get to look left and spot that window of opportunity. You look for previous swing highs, which can become current resistance, or previous swing lows, which can become current support. And you learn how price behaves at a weekly trading zone. Price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon, if price is above the 30-minute BVC, it's trying to get to the zone above. If price is below the 30-minute BVC, it's trying to get to the zone below. We've published the zones every week since December 14th of 2009, closing in on 15 years. They come out Monday morning at 6:15 a.m. Eastern, and once they're published, they're carved in stone for the entire week. Other than that, just resist the urge to make it any more complicated. As long as you know which way the wind is blowing, it's pretty simple to reach your goal of the day. So let's go see. Looks like the wind is blowing north. Now, we talked about this area right here for days. See where the red line crosses below the green line? On the daily chart, it's a little harder to see exactly where it happened. Yeah, you can blow it up. Like so. And it looks like it's about right there. So about 52.34. And today's high is 32.75. Okay. So it's an area, but that is an area where you should expect resistance. I put my chart back together. Maybe, maybe not. That's pretty close. Should have just left it alone. Yeah, that's pretty good. All right, so we know this area here that we're approaching, okay, or have touched its potential resistance. Above that, this swing high is potential resistance. This swing high, potential resistance. Then we have the all-time historic high put in on April 1st at 53.33 half. The reason we look at a daily chart, institutional traders, the ones who trade in size that actually moves price, they look at daily, weekly, and monthly charts. The way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has to do with account size. Again, they're trading in size big enough to actually move price. So, if you'll spend 2 minutes with the daily chart of whatever it is you trade, you're literally looking over the shoulder of the institutional traders, the deep pockets that move price. Are they selling today? Looks like they've been buying pretty much since the session started. We're a little bit off the high of the day, but not much. But we are approaching this area where we expect resistance. Whenever you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. Now this green line, that's the VVC, bull-bear cross, bullish above it, bearish below it. So now that we're back above it, we're going to be bullish now. We've gone sideways for 3 days. Been a very low volatility type of a week. And so, if this step line crosses blue and climbing, we will expect a retracement back to the VVC. Where we close today will be really important. If we close any higher than where we are now, we can probably say that we've overcome the bearish cross. And then we would be looking at 52.85 as the next area of major support or resistance. The high of this candle right here, 52.85. Okay. All right. As I said, all alerts are created on the 30-minute chart. Vertical line separates today, Thursday, Wednesday, Tuesday. When price drops to a zone, we expect support until proven otherwise. When price rallies up to a zone, we expect resistance until proven otherwise. Here's where we opened last night, and it was 15 minutes into the life of this 30-minute candle that the CTA numbers came out. Once blue and climbing gets directly above price, it often becomes resistance because it's on its way to becoming red and falling, which is bearish. It's called the CFMA1. That's the technical term. I just refer to it as red and falling, blue and climbing. One is bearish, the other bullish. So we walked sideways for a few hours last night. Then we got a bearish cross. Took us down to the weekly trading zone, where we consolidated for an hour and a half. Remember, these are 30-minute candles. Then we actually dropped below the zone, and we traded down to a low of 51.95. And you'll see that's right where this turned, right here. Now, support will send the market looking for resistance. So back we go to the BVC, which we expect to be resistance, and the zone, which we expect to be resistance. That's resistance times 2. But red and falling turns to blue and climbing. So after 2.5 hours, we finally break away from the zone. We get a leg, get a retracement, get another leg that takes us through the target, and we take out the high of Tuesday. This is Tuesday, this is Wednesday, this is Thursday. The highest weekly zone is up at 52.89. Is it possible we get there by tomorrow? It could happen. I think it would take some pretty powerful news, because this is kind of what we've been dealing with all week. Flat and sideways. We had fairly decent day there. We did cover some ground, but the last couple days been very flat, very sideways. We had one major move to the upside here and one to the downside here. When we came down, red and falling acts as support when it gets directly below price. But right here, buyers came in, got us above red and falling, turning it to blue and climbing, and then we had the perfect stack on the way up. Price, step line, blue and climbing, BBC. On the Dow, looks pretty similar. Here's where we open. Blue and climbing was directly overhead, so resistance takes us down to support. We consolidate at the zone. Only three things happen at a zone. 70% of the time will be consolidation. 20% of the time rejection. 10% of the time slice. So we consolidate for 2.5 hours at the zone. And then we drop to the support area that was established yesterday. And that support sends us looking for resistance. We make it through the zone. We take out yesterday's high. We hit the long target. But we've now gone sideways for a couple hours. And you'll see the step line here is hooking right, attempting to cross blue and climbing. Once that happens, we then anticipate a retracement back to the BBC. Pullback holds more often than not. But once price gets back to the BBC, you've got to be patient and see if it holds or not. If it holds, then you'll have an opportunity to trade long. If it doesn't hold, you got to be careful because you got a bullish cross right here. And a bullish cross that leads to an extended move. First time price revisits that area will almost always be good support. If price comes down through the BBC, be sure to keep that in mind. And then right below that is the weekly zone, where we've spent most of the session consolidating right above and right below. Russell, here's where we open. Below the BBC, dropped right to the short target. Support that was defined yesterday. Get above the BBC, make a run up to the zone, get a retracement, another leg that takes us through the zone and through the target. And you'll notice today's high. Remember, this is Thursday, Wednesday. On Wednesday, we had a bearish cross. It led to an extended move, and the first time price revisited that area, it became good resistance. That's powerful. Doesn't happen every time, but it sure happens more often than not. Okay, Michael's going to give us a recap of the live training room this morning, and then we'll go live on TradingView for 30 minutes, and then we'll complete the recap we were on and wrap things up with our good word for the day.
All right. Here we go.
Looks good.
Let's start out with this. So, good afternoon, everyone. Today is Thursday, the 9th day of May, 2024. 9th day of May already. Whew. All right. So if you have not taken a free trial with us, then go here to mytradingiq.com, click on the purple button right here. It says no credit card is required for the free trial. Click on that, and it's going to bring you to this registration page. All we ask is your name, your email, and your phone number. Down here at the bottom, if you have machine ID, give us your machine ID for NinjaTrader. If you have TradingView, give us your login ID. All right, click on the register button, and when you do that, you're going to be sent all the information that you need to get into the room in the morning. All right, and we'll be able to activate your indicators. If you give us that information down there, we'll be able to activate your indicators for you. We recommend you get your trading platform set up before you get started, okay? before you get started with your trial. So you'll be able to see and use everything that we're doing. All right. Now, today we had a pretty good day in the room today. Oops, that's not today. We had a pretty good day in the room today. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today's the 9th day of May, 2024. We made 88 ticks on the NQ, 31 ticks on the Russell. We lost 5 on the YM, and we made 1 on the ES. That puts us at 582.5 on the morning session. Today it took 16 minutes and 2 trades to get to the goal for the day. At that point, we're up $2,975 with 17 contracts on. And we took a total of 15 trades this morning. So that puts us on a month at $2,830 with 1 contract over 7 business days, averaging $404 per contract per 2-hour business day. On the year, it puts us at $36,565 over 88 business days, averaging $415 per contract per 2-hour business day. Now, if you were to quit trading when you get your goal for the day, and you would add 1 contract per month so far this year, you did it just like me, and you quit after getting your goal every day, and you started with 1 contract in January, you would be averaging $1,055 per hour, quitting when you get your goal for the day. And so far this year, you would have had to work 32.33 hours, so 32.25 hours roughly. Now, if you started like me at the beginning of 2023, you would be at 17 contracts right now. All right, and having worked my way up to 17 contracts over the 17 months, I am now averaging $5,756 per hour. Okay, so if you do the math on that, so far this month, we've worked 61 minutes, right? 61 minutes or 1 hour. And we're actually at $17,595 with 17 contracts on right now. Right, for this month, 61 minutes, $17,595, quitting when I get the goal for the day with 17 contracts on. So the average, the average starts out in here with 13 and works its way up. So with 13 contracts back here, for 50 minutes, we'll say 8 hours, a little more than 8 hours, we average just about $6,000 an hour that month. Okay. Pretty good month so far this month. So let's get into the actual trades, right? Again, if you haven't taken a free trial with us, go to mytradingiq.com right here, mytradingiq.com, click on the purple button, no credit cards required for the trial. Do that, okay? Okay. Now, on the YM today, let's get into the trades that we actually did do. We only had a couple of trades on the YM. We ended negative on the YM. One of the things about the YM, I want to show you one of the things we looked at this morning about the YM. Here it is right here. So this morning when it was in here and this big candle was being built, I went through, yesterday we did leg lengths in the lesson plan. And so I wanted to show you how the leg lengths work on the larger time frame too, exactly on the larger time frame. I just took this leg length from right here, this leg length, and I put it over here, and I said, this is what we should expect out of the day. And I said that when this candle was building right here, and that's what happened. All right, so now we pulled back down and we bounced off the MA1 here. The next level up, I was thinking we're going to get a deeper pullback. 50% pullback would be good on this. When it does pull back, the black line is not crossed down below the BBC yet, on the MA1 yet, so it's not ready to go down to the BBC yet. But when it does pull back, so far this is a 50% retracement. It's going to be a little higher than that. The 50%'s moved up a little bit. No, it hasn't actually. It's right there. But that is what we were going over this morning. Okay. Now all the other marks are kind of a mess. If you look at them in the bigger picture, they're all kind of a mess in here. We're looking the this is the NQ, and at the time the NQ was in the air, and I wasn't sure if it was going to get out of there or not. And then it finally did get out of there, and it made a good run. It was actually down here, and it made a good run, and it ran up toward the weekly trading zone. I was thinking it was going to get all the way to the zone, but it didn't, and it pulled all the way back down, and it got in here, but it didn't close within here. Okay, if it would have closed within here, that would have been pretty bearish. The black step line did get below the MA1, and it just about hit the BBC, which is what it typically does when that happens. So now with the NQ, I'd expect it's going to make another run here with the weekly trading zone, and possibly up to this level right here. Okay, now this was a leg length that I grabbed from a prior time, but you can see how that leg length plays in right there perfectly and right here perfectly. Okay, now that was from a prior time that I was looking at, thinking it was going to get up to that level based on, if you go back a little more, based on the action that we had over here. Okay, you see how it just repeats itself again and again. That's the NQ. I'm just going to go through all this while I got it up here, the 30-minute stuff. Okay, the ES now. this right here, because we had so much space between these two weekly trading zones, the midpoint was right there. This is the quarter point. And I was saying, I think the quarter point is going to get hit when it was back here the other day at 9:30. I said, I think the quarter point is going to be significant in this because there's so much space in between here. And so it did hit the quarter point, and it failed off the quarter point and made it all the way back down here. Now, if you were to start drawing your leg lengths, I mean, you could use this one right here, but I would say go from here to here. Right now, from here to here. That's going to be pretty close to this one. And then the pullback on that, let me just draw it. Let's use this piece right here. Okay. We'll go from here to here. Okay. That's your leg length. And then you draw it again from there to there. All right. And then you use it again from there to there. And then you use it again from here to here. So if you exceeded that a little bit, it's due for a deep pullback right here. The ES is. Okay. Now, I don't know what the market's going to do, but it's due for a deep pullback. Right. The Russell is kind of got a mind of its own, but it's closing down below the MA1, which suggests it's going to get down here to the BBC at some point soon. And the NQ, it's important that this bar continue up and close bullish, all right, on the NQ on the 30-minute. Sorry, Dwayne's going to go over all that with you. There are some really nice trades that are triggering right in here while I'm talking about all this, but I didn't go over all the trades that we did. Starting out with the YM. Sorry, starting out with the YM. We had just a couple of trades this morning. We had started out with a +5 right here. That was our first trade of the day, was a +5 right there. And our next trade was right here where we stopped out, -10. So that put us at -5 overall on the YM this morning. Okay. And since then, it's, well, blue arrows. We had one blue arrow back there at 10:30 that didn't go anywhere. And we had this one blue arrow right here that also didn't go anywhere. So the YM, what we were looking at this morning, I drew this level in here this morning, and you can see I drew it at this time in the morning at 10:11. I said, this is what it looks like price is going to try to get up to. And I just showed you that on the bigger picture. And you can see it got up there and it just stopped right there. It just stopped at that. And that was from the bigger picture stuff that I just showed you. Okay, so it's been jammed up there ever since. And the Russell so far today, let's see. I think these are all the trades on the Russell. Yeah, these are all the trades on the Russell. So far on the Russell today, we had a +13 on the first trade, a +6 on the second trade, and then a +12 on the third trade. That got us to 31 ticks overall on the Russell. During the break, there was one blue arrow here and a couple of purple arrows in here. Now, let me describe the purple arrows to you once again. Let me take the question box out first and see, make sure nobody's got any questions. Or there was a question here. James, daily bearish cross is up there, and I think James logged off. But I want to look at the YouTube too and make sure that there's nothing going on in the YouTube. Hold it just a second. Here it is. Okay, nobody's asked any questions for me over there. All right, so we had a blue arrow here, and the purple arrow, what I was saying about the purple arrow is it doesn't take the no trade zone into account. It doesn't take the slingshot into account. All right, all it's looking at is the outer band and that the black line is in the right color. You pull back to the ribbon when the black line is in the right color. Things that you have to realize with the purple arrows is that you still have to have the swing higher, swing low coming into the trade. Okay, this has to be coming off a higher swing or a lower swing. You're going to get these purple arrows when there's no trade zones and when the outer bands are flat. Right? Can't do anything about that. It's just going to happen that way. It's the way it is. Sometimes these colors change in the outer bands, and that's what it's looking for. It's looking for the color change in the outer band. Okay. So that was it for the Russell today. We ended up with +31 ticks on the Russell. The ES, we only had a couple of trades, and we ended up with just 1 tick on that. Right here, we had a break even right there and a +1 tick on that one. And this, we're using this as our example today when we're reading the DOM. We're reading this out of the DOM and this out of the DOM, saying that these are the places that price is going to be searching for. And it still hasn't gotten up to that second one, but we should be able to see right now if that is still a valid number up there at that 32.75 right there, 32.75. Or I'm sorry, 33.75, 32.75, 33.50, 33.75, whatever it is right there. That's it right there. That number is still a valid number up there that it's trying to get up to. Right. And what we're illustrating this morning is that when you get an opportunity like that, you can use use the DOM to help you manage a trade. All right, so the first opportunity we had on this move up was back here, right? 1029 was this bounce off the ribbon right here. That was a valid trade right there off the ribbon. Didn't give you any kind of an arrow because it didn't come out of the oversold, but it was a valid trade right there that ran all the way up to this swing high. And this was taking this leg length from back here, was reapplied right there. And then on this pullback here, we were able to analyze it as it was pulling back and as it was building all these bars through here, pulling back, analyzing the leg length and the pullback length. And it never did make it up to that second one. It pulled all the way back down through the ribbon after this green arrow did not put in a higher swing. So that was all we had going on there for the ES today. Okay. Now on the NQ, let's go back all the way to the beginning. Let me hit the alt and back arrow on that. Oops, didn't mean that. Hang on, cancel. Alt and back arrow. There we go. And there. All right. So on the NQ, right here on the NQ was our first trading opportunity. We had a short there. I think that's where we got the goal for the day. It was right there. We picked up 30 ticks on that. Right, the next trade we took was right here. We had a break even on it. There were some more opportunities through here that I didn't get a hold of. And then we had a plus 20 on this one to get us to 50. And then we had a break even there, and then another plus 30 on that one to get us to plus 80. And then another break even, and then a plus 8 on this to get us to plus 88. And that was where we wrapped it up. It looks like, yeah. Oh look, I had another one right here that I didn't count. I thought I had another one in there that I didn't count somewhere. But anyway, plus 88 is where I stopped counting. But right here, there was a blue arrow long trade through there. And this is off the ribbon right here. You didn't get any kind of an arrow because it didn't come onto the oversold. You didn't get a purple arrow because the outer band was white on the up close. Okay. And going through it all, there was a blue arrow here that wouldn't have worked out. We took another one there that was a break even. And then we get into the break. All right. So in the break right now. In the break right now. We had a purple arrow there that didn't work out at all. Green arrows and black arrows all through here. All worked all the way down. Even all the way down. I wouldn't have done that green arrow because this blue one needs to put in a lower swing, but the blue one did give you enough profit. This purple arrow didn't give you anything right there. Blue arrows in here. This is during the break. Blue arrow there worked out. Blue arrow there was break even. Blue arrow right now. But just about break even right now. That was the morning session, guys. Okay, that was the morning session. So these numbers right here are triggered from this blue arrow. All right, I've been getting some feedback lately about the table, not just here, but the table and TV trades as well. You have to understand what's triggering the table, the values in the table. For the stuff in here on the TIQ context PP, the table is being triggered by the blue arrows. Okay, the table is being triggered by the blue arrows. If you don't have a blue arrow, if this, like the green arrow doesn't trigger anything in the table, the blue arrow does. It goes all the way back here. Now I did set it up in here so that it will trigger alerts if you set the alerts up. Hang on, I'm gonna bring this over. I'm long right now. I took that blue arrow right here. I stop at break even and lock in 4 ticks. We should get all the way up here to the prior swing high. So I'm gonna get 4 ticks. I'm gonna get 30 ticks on this trade. All right, I'll let you know if I hear it in the background. So my DOM is behind there right now. But I added new alerts in here so you can add alerts individually for the things. All right. Now when you get a green arrow long or green arrow short, that's going to give you an alert over here. Okay. It's going to give you an alert over there. It's going to trigger it like this, like that last green arrow just triggered right there. And it gave this alert right here. It's going to do that, but it's not going to change the stuff in the table. Only the blue arrows change the stuff in the table. Okay. Only the blue arrows change the stuff in the table. All right, it'll be really complicated to make the green arrows change the stuff in the table too. All right, it looks like we're going pretty well here on this trade. I gotta find my DOM. Hold on, my DOM is buried. We're on the NQ. Here it is. Okay, so we're gonna lock in some more. It's 12 ticks right there. So we have 12 or 30. 12 is what we ended up with. Got pretty close to the 30 there, but it didn't actually take it out. All right. Any questions? Does anybody have any questions at this point for me? If if not, we'll just get into the trading. And it's all sound went away. I should have gotten into the trading 8 minutes ago, but we'll just get into it. We just took another long trade right there with 12 ticks in profit. I don't remember if we took that. Doesn't look like I have a trade on. No, I don't have a trade on. So I missed that. Over here on the Russell, we changed in directions here, but we really want to see a pullback and bounce off the ribbon. Okay, we really want to see that pullback and bounce off the ribbon. All right. So right now, those of you guys that have been following along with my issues with the fiber optic and all that, I got it at the best state that it's been at so far, I think. The speeds aren't great, but the connectivity is great. And the upload speeds are awesome compared to what I'm used to using. But most of my data is download. Now, if I look at it, all right, now, the good thing about this is I can look at all the individual devices and see how they're doing it. And this one right here that we're using right now is this. All right, we have to wait right here on the Russell right now. We're testing the ribbon. We're going to be coming out of the, it doesn't matter if it comes out of the oversold or not, 76.2 up to 77 on the Russell. And you guys, anybody that was in the room this morning might remember there was something this morning that I was saying we had a gap to fill between 77.7 and 78.8. There was a gap that needed to be filled in there. It looks like it, 78.7, looks like it filled it right here. Once you got up through there, it filled that little gap. That goes back a couple of days where that gap was. All right, so here's a long trade right now on the Russell. It's right in here, and we're along right now. Okay. Nice. You got a purple arrow and a blue arrow. What that means is you got the blue arrow, but the outer band is the right color. Okay, so those are some high probability trades right there. Gonna bump my stop to break even, and I'm out of break even on it. Okay, if you get the purple and the blue at the same time, that means the blue, you got the blue arrow, all the normal stuff with the blue arrow, but the outer band was the right color. So the purple arrow, which doesn't care about the slingshot, in this case, the slingshot worked for it. And those are usually really good trades. Okay, really high probability trades. All right. More stuff, guys. Any questions? Anybody? At this point, it's 1:11. 1:11. John. Let's see. Let's see. Okay. All right. There's a purple arrow over here. Now, what I said before, the purple arrows don't care about the no trade zone. Okay, they don't care about the slingshot. They don't care about the no trade zone. I may put in one thing to make it care a little bit about the slingshot. Just a little bit about the slingshot, but not too much. You know, if you look at something, let me just do this. Go here, do that, and do data window. And you look back here on this one. What am I looking for? Down near the SHP arrow. Nope, I guess that's not what I'm looking for. The lead down here, the lead, see it's 19.1 right there. 82.6, 82.6, and 100. 100 down to 82.6. And then it goes to nothing. And I don't know why it goes to infinity right there, but what is it right here? 82.8, 82.6, so it's actually higher. Interesting. I don't know. Little details. So right now we are looking for, we want to get a higher swing on this. We want to get a higher swing on this. See how this triggered right here? What that means, that's just because it's not in a no trade zone and because the outer bands are spread. That's just a ribbon trade right there. It's a bounce off the ribbon where the outer band is the right color and the black line is in the right color. The black line for a purple arrow, the black line has always got to be in the right color. Okay, so anytime you get a black arrow, the black, and you get a purple arrow, the black line is always in the right color. Wow, these colors are mixing me up. Must be really mixing you guys up. Sorry about that. Pick a color. All right. Back here, I don't see any questions coming in on YouTube stream right now. Some people are watching it, but I don't see anything coming in right now. So it's looking at my DOM from a few minutes ago right now. So this needed to put in a higher swing to have another trade. We're not going to be able to do that. Over here, we came out of the no trade zone. We gave purple arrows in here, but it didn't give a red or a blue arrow. Now the red and the blue arrow are the ones you have to have a higher swing after. The purple arrow, you want to have a higher swing before you take the trade, but they don't have to put in higher swings themselves because you're not worried about the slingshot on that. Okay. All right. So we're just waiting for trade setups. It's 1:16. We got about 14 minutes left in this session right now. 14 minutes left in this session. And hopefully get something here. Pulling back down, testing the ribbon. Testing the ribbon here as well, but this needs to put in a higher swing. The ES did not need to put in a higher swing. We did finally get up to that 33.75 number though. And I wasn't looking while I was up there to see what the next number up should be, but right now the next number down, it's looking like 27.75 possibly. If it goes all the way down to 27.75, it's going to change directions on us. So the next number up right now is up at 32.5, roughly 32.5. Okay, that's just right here. That's not very far up. All right. So we're going sideways here. We're in an uptrend on the Russell. We're not doing anything here on the YM. And the ES and the Russell are the only things that could give us a trade right here. The NQ could give us a short. It's not there yet, but it could give us a short. Okay, but I think the ES is going to give us a little bit of a long. It's actually not. It's going to get down to the oversold. It's not going to give us anything. We might not have any trades. Okay, does anybody have any questions about anything? Let's go look at some other things. I was wondering what's going on with Bitcoin today. All right, more movement down. That's what I was expecting. Anticipate it's going to get down to this level down here, right? Then pull back and then go down again. That's what I'm thinking is going to happen with the Bitcoin. I don't know, but that's what it's looking like to me. And we'll go here and look at this back on the Exxon. I think Ray's watching, but he did say he made some money in the pre-market today. Oops, I clicked on the wrong one. This one. So our 9:30 trade on Exxon worked out just fine again today. 117 up to 118, another dollar. I'm telling you, almost every day he gets a dollar in the morning. What are those options? They expire daily. That's interesting. That was a, look at that. The upload is like multiples of the download. That is unusual. Still trying to work out everything with this fiber optic thing. And that was horrible. All right, let's go back to 4 here. Back to 4. And not getting anything on this. Nothing. All right, we'll go back out here to 6 and let's see. Well, let's go something else. Mister. Let's look at Mister. All right, so 15 range isn't going to work for Mister because it's $1,200. So we'll go to a 100 range. So every bar is $1. Okay, so even 100 range is probably too small. Let's go to a 200 range. Every bar is $2. Oops, I don't have a 200 range. Let's make one. Make a 250 range. So every bar is $2.50. Oops, that was 250 minute. I didn't mean to do that. 250 range. Okay, so now every bar is $2.50. That's a little better to look at. Do I only have the shorts on? I mean, the longs on? It would appear that way. Nope, I got shorts on too. Okay, so far today, on the Mister, the indications it's given so far today, starting out all the way back here at the beginning, right here at the beginning. Gave a long trade from here at 12.10 that ran up to 12.23 for a $13 gain. Then gave a short trade here from 12.09.26. Now, what was the stop on this? The stop on this should have been up here. Okay, so 12.09.66, and the stop would have been up here at 12.16. So you would have had a $5 stop on that. $6, $7 stop on that. And it gave in profit, not very much, not enough, about $4. And then on this one here, your stop would have been a lot bigger. Your stop would have had to be way down here on this one. The entry point would have been here at 20. The stop would have been down here at 10. So you had a $10 stop on that, but it went from 20 all the way up to 37 for a $17 gain. So if you're just in here and you're trading this, day trading this, this one here, the stop would have been down below this level right here. So it almost stopped you out, but you had a stop on this of 31, we'll say, down to 26.5. So $4 stop, $4.50 stop. And it went from, what was the entry? 31. Okay, so it was a $5.50 stop. And from 31 all the way up to 57. Wow, $20 gain. You can see that it's given some pretty good indications in here. And if you just wanted to get rid of the shorts and only do the longs, you can do that by just getting rid of the shorts. And if you want to throw a bias on there, well, that's really going to get rid of most of the trades if you throw the bias on there along with getting rid of the shorts. I just had one trade, right? 2 trades. And this one here. And this one here. Both really good trades on the Mister. Some of you guys may know what that means. Some of you guys may not. But when I put the bias on like that, what it's saying, it's using a 233 simple moving average for a bias. If it's above the 233, you're only going to get longs. If it's below the 233, you're only going to get shorts. That's what the bias gives you, all right? And then by shutting the bias off and only showing things, showing all the trades, you might have a couple more that are longs in here. You had that one there at the end. You had that one at the beginning still. You had this one at the very beginning. So you had a couple more long trades in there. If I take the bias off, that one, that one, that one, miss that entry, this one, and that one. Okay, now one of the guys that's using this, one of the people who are using this was asking something about why didn't we get a trade here, and he'd ask why didn't we get a trade here too. And the reason is because the bar before it did not close up. Right? If the bar before it closes down, it's not going to give you a trade. The bar before it has to close up. The low of the bar before it has to be lower than the bar that you're getting into. Okay, it's going to be lower than the trigger bar when you're going long, like this one right here. Okay, this one right here. This one right here. This one. This one. This one. That's why you didn't get arrows in there. Okay, you didn't get long arrows because that bar closed down. And it's good you didn't, because it would have stopped you out to the tick right there if you would have gotten it. If you would have gotten it on that one, it would have stopped you out to the tick. And this one over here would have worked out without stopping you out, but that other one would have stopped you out. So you give up something by doing that. Right. Back in here, we don't have any more trades yet. We had a purple arrow there and a purple arrow there. Both of those worked out, but we don't have any more coming up right here, right now. It's 1:25, so we have about 5 more minutes. For those of you guys who don't know, this stuff right here, this is Target View Trades. Go to targetviewtrades.com to learn about that. Okay. And the webinar that we did on that on Tuesday is posted on targetviewtrades.com. And I'm going to be doing another one on Tuesday this coming week. All right. Going to be doing another one this coming week on Tuesday. So for those of you guys that want to attend that, you are welcome to. Everyone that went to the last one, I'll send you an invite to the next one. Okay. Everyone that signed up for the last one, even if you didn't make it. Okay. So we're pulling back up and testing the ribbon here on the Russell. The purple arrow did not put in a lower swing, all right? But again, it's okay. Right here on the YM, we need a down close on this. 413 minus 8 is going to get you down to 405 on the YM. Right, and on the Russell, we've got a high right here of 75.8, so you'd be selling 75.0 on that. Nothing on the S and nothing on the NQ right now. Okay, nothing on the S and nothing on the NQ yet. Okay, over here now, we're probably going to run out of a trading opportunity over here on the YM. It's going to be 16 down to 8 right now, but it's probably not going to end up being a trade. Okay, probably not going to end up being the trade in there. Okay. Nothing here, nothing there, nothing there. It's probably not going to be a trade anywhere. I'm going to cancel the orders that I had waiting out there on the YM and the Russell. I don't think we're getting anything on those two. This one more time. All right. Well, we don't have anything happening right here, guys. Just waiting. Some alert just triggered. Green arrow long on the NQ15 range. Okay, well, the black arrows were triggered, actually. 1328, is that right? 2756. Huh. Let's check that. All right. More questions. I don't see any questions coming in, and it's going to be time to wrap it up in 1 minute. I don't think we're going to do another trade here in a minute. So I'll show you this again. If you have not taken a free trial with us and you want to, go here to mytradingiq.com. Click on the purple button right here. Right, there is no credit card required for the trial. Click on the purple button. When you click on that, it's going to bring you to this registration page, which is going to be refreshed tomorrow. All we ask for on this page is your name, your email, and your phone number. Down here at the bottom, if you have a trading view, give us your login ID. If you have an NinjaTrader, give us your machine ID. That's all we need to get you going, okay? Once you give us that, you have all the information you need into the room in the morning. The room runs from 9:15 to 11:30 every day, okay? And so hopefully, take the trial, you get in there. It's free. It's absolutely free, okay? Let's see. I don't see anything else coming in. So that's going to be it, guys. With that, I'm going to wrap it up, and I'll pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes.
Excellent. Okay.
All right, recap of the morning session.
Today, it took 16 minutes and 2 trades to get to $2,975.
Good job.
Thank you. Thank you.
All righty. Pick up where we left off, guys, with Russell. Here's where we opened last night. This was the opening candle, and it was 15 minutes into the life of that candle that the CTA targets came out, and we made a beeline to the short target. Buyers came in before we hit the low of yesterday and got us back above the VBC, red and falling, turned to blue climbing. Then we had a leg that took us all the way up to the target and a retracement back to the BBC. And remember, the pullback holds more often than not. So we get another leg that takes us to and through the target. Now we've just been consolidating sideways for 1, 2, 3 hours. And bearish cross that happened right after the open Wednesday night that has created this resistance right here. You have a bearish cross that leads to an extended move. First time price revisits that area. Almost always resistance, as you see here. Now here we created a bullish cross. See over here, the red line got below the green line, but here the blue line got above the green line. Bullish cross. So should price, now that the step line has crossed blue and climbing, we expect price to retrace back to the VVC. Pullback holds more often than not. And you've got support times 2, because the price drops from here. You've got the VVC, good support, and the zone, which could be good support. So that's support times 2. But the market is determined to go down. It's going to go down. Watch this area here. Not only do you have a bullish cross, notice on this candle here that spiked down, it spiked down right to that bullish cross. 2060/2061. Watch that area as potentially good support if price drops below the BBC. On the NQ, here's where we opened last night. Below the BBC, red and falling took us right down to the zone. Price drops to the zone, we expect support until proven otherwise. When price rallies up to a zone, we expect resistance until proven otherwise. So there's Tuesday resistance, Wednesday resistance, and now Thursday resistance. This has been about a flat a week, and the NQ is seen in a while. Last 3 days anyway. So we hit support, and support will always send the market looking for resistance, and resistance will send the market looking for support, and that will send the market looking for resistance. So now we're looking for support. Step line has crossed blue and climbing, so expect price to come back to the BBC. The question then is, does the pullback hold? We know it holds more often than not. Just got to be patient and see. Now, this bullish cross you don't need to worry about because that's already been covered here and here. Okay, price has already spiked it. Notice price came all the way down. This was the 9:30 opening candle, which is usually a lot of volatility. Came down to the zone, bounced, closed right at the bullish cross. Okay. All right, crude oil. Here's where we opened. Ran up to the long target. Resistance. Send us back to support. Back to resistance. Then we get below the BBC, come down to the weekly zone, support. Price drops to a zone, we expect support. That bounced us up to resistance at red and falling. And that sent us back down to the zone, support. Back up to the BBC, which we expect to be resistance. And now where are we headed? Back to support at the zone. That's how it looks from here. Now keep in mind, these are the zones that were published Monday morning at 6:15 a.m. Eastern. Once the zones are published for the week, carved in stone, they don't change in any way whatsoever. Thursday, Wednesday, here's Tuesday. See the market found resistance and support. Got a bounce, support again, resistance, support, resistance, support. Got this little double top here. We didn't make it all the way up. And as usual, we can look left and now why. It is. And now we're headed back to the zone. The question is will the zone hold? Doesn't? Got a good opportunity from 78, 78.80, 78.70. It's enough to get your goal for the day. The zone here is 78.95/79. So current low, yep, not enough room here. Need to wait for price to get below the zone if it gets below it. It's tried twice so far today and not been able to. Gold. Here's where we opened last night with support below us, resistance above us. Red and falling turned to blue and climbing. So that got us above the BBC. And on the first trip up, right there, see, we ran into that bearish cross. So that sent price back down just a little bit. Then we broke through it on the next attempt and hit the long target. When the market runs into resistance, it'll go look for support, which it found at the short target. Resistance at the BBC. support at the short target, and that sent us up through this target here and through the zone. And then this was 8:30. This was that news. We had the retracement back to the VVC and then a leg. And now we've been consolidating sideways, and blue and climbing has gotten directly above price. Expect that to be resistance. So you're going to end up with a high, a lower high, and probably a lower high. Blue and climbing will hook over, turn down, and become red and falling. Step line has already crossed blue and climbing, so we anticipate pull back to the BBC. And as that pullback happens, that's when you'll see blue and climbing, just like it did here, become red and falling. Silver, strong day for silver. Here's where we opened last night. We dropped to the weekly trading zone at 27.51/52. Good support. That got us above the BBC, turned red and falling into blue and climbing. So we got a leg. That leg right there is more than enough to get your goal for the day. Only takes 2 pennies with silver. We open that candle at 27.60, and we ran up 8 cents. So that's $400 per contract traded in that 30-minute candle. We find support at the BBC. So we get a nice leg. Look over here. That leg is that high. So then we get a retracement. Come. This retracement sends us up to this resistance, which brings us back to the VVC. The price is trying to get to the zone at 28.50. Now that is the highest weekly zone for the week, 28.50/51. And consolidating sideways for hours. Blue and climbing is now directly above price. So the highest probability is that price is going to retrace to the BBC. Question is whether it holds or not. Now when the price of silver moves $1, that's worth $5,000 per contract traded. So from 27.51 to 28.51, that would be a $5,000 per contract move. Right now it's about a $4,000 per contract move. And on the euro, here's where we open. Dropped right to the short target. That supported the zone at a double bottom there. Red and falling turned to blue and climbing. It's up to the zone. Up to the target. Step line has crossed. The left side of blue and climbing to the right side. So we've got resistance directly overhead, which means price will probably work its way back to the BBC. In fact, BBC may, as we consolidate and come back, BBC, they'll probably meet up right around this zone here. Okay. And one last look at the daily. Hit that bearish cross area. Question is, do we spike it? Do we take it out? Do we close above it? Close much higher than where we are today. Then you got to start looking at these highs. Here, 52.57, 52.85, 53.08, and then the all-time historic high at 53.33 half. To become a member and be in the members only workshop tonight, go to mytradingiq.com. If you have questions, call 949-42-EMINI or send an email to support@cfrn.net. As a member, you'll have access to live training 2 hours every trading day. Puts you out in front of 90% of other traders, new traders who don't have someone to teach them how to do the job. Along with the interactive live training, 2 hours every trading day, you also have access to one-on-one private mentoring, no additional cost, strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs. Price flows the same across all markets and all time frames. Like I just showed you, with each one of those markets, from support, resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. Also, as a passport holder, you get the Logic 247 alerts, the concierge trade alerts, the weekly trading zones, and as I said, you'll be in the members only workshop tonight. It really is everything a trader needs, all under one roof, at one low price. mytradingiq.com. Call us at 949-42-EMINI or email us support@cfrn.net. Let's wrap it up with a good word for the day. Learning to respond the right way. Romans 5:3. We can rejoice too when we run into problems and trials. In World War II, Viktor Frankl was sentenced to a Nazi concentration camp. Guards deprived him of everything. They took his wife, his family, and his clothes. They even stole his wedding ring. But he had one thing no one could take from him. In a classic book he wrote, "The last of human freedoms is the ability to choose one's attitude in a given set of circumstances." The guards could not take from Frankl his freedom to choose his attitude. We do not know what is going to occur tomorrow or even today. We cannot control all of our circumstances. What we can control is how we respond to them. We can control whether an experience makes us stronger or weaker, increases our faith or our fear, makes us a better person or a bitter person. The saying goes, the same sunshine that melts the butter hardens the clay. God wants our struggles to strengthen us. Paul writes in Romans 5, we can rejoice too when we run into problems and trials, for we know that they help us develop endurance. And endurance develops strength of character. And character strengthens our confident hope of salvation. And this hope will not lead to disappointment, for we know how dearly God loves us, because he has given us the Holy Spirit to fill our hearts with his love. And here's another very important thought. The tests and trials we go through in this life are what qualifies us to rule and reign with Christ in the next life. Knowing that, will help you to respond the right way. And always have an attitude of gratitude. That's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you. His mercy, with His grace. I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.